In this video, I'm gonna show you a live example on how to do your remortgage/refinance on your property. So remember that when you signed the mortgage and accepted the mortgage offer, that was for a fixed interest rate term or a fixed term mortgage, meaning that the interest rate for a few years, 2, 3, 5, or 10 years, whatever you've signed up for, the interest rate has been fixed. When that expires, your lender will automatically move your mortgage to a variable rate interest rate, meaning that it will usually go up significantly. So you must make sure you refinance and remortgage, because that will usually mean that you pay less money each month, which is good, right? So let me show you how to do that. So I'm going to log in securely on my lender's online portal where it allows me to refinance on my mortgage. This option should become available to you a few months before your mortgage expires. So when I bought my first property at 25 and I was doing my research, it turned out that Nationwide was providing the best offer for my circumstances in terms of an interest rate and the cost of product. So I'm going to securely log into my account using their card reader, go to my mortgage account, and you can see that I've got a really sweet interest rate that's about to expire, which is 2.89%, which at the moment is £322 per month, just because the first property I bought was a flat that's worth £92,000 and I paid in a deposit that was £14,000, and then I've only got a mortgage, which at the moment is £75,000. So I want to go to manage, view mortgage overpayments, go to mortgage manager. And now I'm taken to a separate portal that you have access to only when you're a client and have a mortgage. So over here, you can see I have remaining £74,000, and you can see it says your product is ending soon, end of June. You can reserve a new product before the deal ends. So I'm gonna click on explore my options. Unfortunately, I cannot repay my mortgage in full. And even if I could repay my mortgage in full, I have way better ways to spend that money instead of repaying the flat. So I'm gonna go with the new product, which is this. Find out if you can switch. Switching is just a way of saying refinance or remortgage. I'm going to stay with the same lender just because my research shows me it's gonna be a nice offer. Manage your mortgage, mortgage switch, and option for term change. Get a new deal and amend the length. Or mortgage term change, apply to extend or reduce the length of your mortgage. So you can see over here I have the option of the length, but I don't get a new deal. So I want a new deal because my existing one is going to expire. So I'm going to click on this one, continue, review your current mortgage deal. Okay, I've got current balance of 74,000, then 284 per month. And if I don't switch, I'm going to start paying 550 a month. That's because the interest is going to become from 1.89 to 7.99, which is crazy. That's more than 4 times my current interest. Okay, yes, continue. You'll be applying without advice, also known as execution only. Yes, that's true. Okay, accept and proceed. Choose a product. Okay, so over here we've got a loan to value of 72.4%, meaning that I've repaid roughly 28%, which is good. I didn't know that. That's really good. Okay, so what are you switching? One of the one account selected. Select the fee option. Okay, so mortgages have fees, and sometimes it's better to pay £999 as a fee if it turns out that it's going to result in a less interest rate, meaning that you pay less money in total overall after time. However, if you're not willing to pay a fee at the moment, you'll get a bit higher interest rate, meaning that your repayments are going to be a bit higher, but you don't pay £1,000 at the moment just for the mortgage. Let me show you an example. So the 2-year fixed with a fee of $999 will result in payments that are $406. And then if we go for a no product fee, you can see that we don't pay $1,000, but then the repayment is, how much is that? £11 more per month. In my case, the balance I owe, which is 74,000, going with the no product fee is usually better, because if I pay 1,000 now, I'm going to be paying £11 less each month. So I won't be making it worth to pay 1,000 and then save 11,000 a month, because in order to make that 1,000 worth, I would have to be staying with that mortgage for more than 9 years to make up for the 1,000 mortgage fee and save £11 a month. However, if your mortgage is a lot higher, that means that the interest rate the percentage change, is going to get applied on a larger sum, meaning that your monthly repayment might have a bigger difference that results in a larger value than £1,000. So in some circumstances, it's better to pay the 1,000 mortgage fee and save a lot more in the long run. It's worth mentioning that I'm not a financial advisor. All of this is my personal experience and my personal thoughts and opinions. So I'm just sharing the experience with you and what I think. Investments and loans carry risks, so make sure you consult with an expert before you take any decisions. Okay, so I'm going to go with the lowest cost deal. And this is where we need to call the shots. So do I want to go with a 2-year fixed, a 2-year tracker, which results in a lot more interest? This is because it tracks the national interest rate, the base rate, basically, or a 3-year fixed. So a 3-year fixed is going to lead to less monthly repayments than the 2-year fixed. But this way, they're making sure you're with them for 1 more year. In the same aspect, if you go with the 5-year fixed mortgage, they will give you a lower interest rate than the 2-year and the 3-year fixed. So you pay even less money each month. But this way, they make sure they have you for another 5 years with them. And they also make sure that you're paying the interest rate of 4.77%. However, personal opinion, I do expect that in the next 5 years, interest rate will probably go down. Again, not financial advice, just what I think. So I don't want to sign a 5-year contract. I'll probably go with the 2-year or the 3-year fixed. Now, personally, I prefer having a bit more freedom at a higher cost. I'll probably go with the 2-year fixed. In this case, it's going to cost me £9 more a month, but then I can remortgage after 2 years. Otherwise, if I sign the 3-year fixed mortgage, I'll be able to remortgage again, but after 3 years have passed. So this is based on my personal expectations of the interest rates going down in 2 years and the economy beginning to go out of recession, hopefully, and inflation settling down and things like that. So that's why I prefer to pay a bit more on a monthly basis, but be able to remortgage, hopefully to a lower interest rate percentage after 2 years. Otherwise, if I was not expecting for interest rates to go down after 2 years, I would have been better off going with the 3-year fixed, again with the 5-year fixed, though based on your personal expectations of what you think will happen in the future. So I'm gonna go with this one. Click continue, compare the fee options. Okay, so it's the same product, meaning the 2-year fixed mortgage. But over here, they show you the difference it makes if you decide to pay the 1,000 fee now or later. So paid up front can be added to the loan itself, meaning that your loan with the bank or lender will become £999 more, but you won't pay them now, but it will get added. So your monthly repayments will increase a bit, but then you get a lower interest rate. So over here, you can see without the fee, our interest rate is 5.14%, but with a fee, the interest rate is 4.89%. So over here, they're just telling you if you want to pay it now or just add it onto the total balance. However, this means that the interest rate will start getting applied to that £1,000 you're just adding as a fee to your existing balance. So bear that in mind. So if I don't go with a fee, I'm paying 417. If I pay it now, I'm going with 404. So let's quickly calculate that. So for 2-year fixed, which is 24 months, I'm going to save roughly £11, which is £264 more I'm going to pay over the course of 2 years if I don't pay 1,000 now. Yeah, I think I prefer that because that's definitely less than £1,000. Alternatively, this is £411, which is a £6 difference with this one. So I'm gonna save 2 years, £6 a month. No, that's definitely not worth it. Okay, so I'm going to go with this one. Again, if you click here, you can see it's telling you actually the net calculations over here. So this is the cheapest. I'm going to pay 700 less with this option. So my calculations are right, which is good. You can also click here to see how all of this is calculated. This is pretty neat. Then I'm going to click continue. Review your term. I have 28 years left. You want to see the impact? Not really. I don't want to change the term. That's fine. Your current rate is 1.89%, ends on 30th of June. Choose a starting date for the new rate. This will be reserved once you finish the application. So let's keep this as long as possible. So the 30th of June, and let's make the new one start from the 1st of July. If you choose a date after the 1st of July, you move onto our standard mortgage, which is the 8% we were looking at. But I'm choosing exactly the 1st of July. So they say if you choose the date after the 1st of July. So I'm going to choose exactly the 1st of July. Finalize the application. Yes. Absolutely happy with this. I can repay 10% of the original loan without any fees. Switch date, this is going to take effect from the 1st of July. Sure, read the mortgage offer. Make sure to read the mortgage offer. Make sure to always read what you sign. I can confirm I'm a UK resident. I've read the mortgage offer and I'm happy to proceed. Submit. Application complete. This will take place on the 1st of July. They will email me my offer and it's all done. So if you want to hear the full story of how I bought my first property at 25, then I'm gonna leave a link in the description below. Also leave a comment below. I'm happy to hear if you have any remortgage experience with your properties. Like the video, it will really help me out. Subscribe to the channel if you want to learn more stuff. And yeah, I'll see you in the next video. Goodbye.